Meantime, our next guest thinks tensions between President Trump and Fed Chair Jerome Powell could reach a boiling point by the next interest rate decision scheduled for later this month. Ben Emons is founder and chief investment officer at FedWatch Advisors. Ben, thank you for being with us. I mean, my goodness, I can't even remember what day it was this week, but it was a long day and a short day all in one. We thought we knew one thing, and then an hour and a half later, we knew something different. Even though the Fed is supposed to be independent, apolitical, there are also people. Jerome Powell is a person. How is it really possible for him and the committee to move forward and continue to do their job seemingly unaffected by this? I mean, isn't everyone just going to be shrouding every move, decision, and discussion point in sort of a curiosity point? Why did they really do this?
Yeah, I think that's right, Courtney. You get now far more scrutiny on this July meeting than we would normally have. This is irrespective of the economic data. We got, reasonable inflation data this week, and we had good employment data the other day, and actually yesterday with retail sales too. So we got an economy that's strong, can keep this Fed on hold for the time being, but the attention to this meeting is only building up. Now, you saw overnight Governor Waller really coming out with I would call a pounding table view of like, we can cut rates now. So that kind of adds into the mix of this, what's going to be happening here at this meeting. Are they really tilting towards easing while you actually have an economy that's strong? I think that tension kind of displayed itself this week in the markets when it really became apparent that they wanted to remove Powell and you saw the volatility reappear. I think this is what we could expect going into this July meeting because the VIX is low, the probability for a cut is priced near zero. So you could get some tension here, I think, as all the scrutiny comes together.
Hey, Ben, it's Courtney Garcia here, the other Courtney who's on the desk. But when we're looking at this, we've clearly had a lot of headlines, right? And at this point in time, Trump is saying that, okay, he's not going to fire Powell. But clearly there is an issue there. They're going head to head. He doesn't want him in. So at what point does it matter if he actually fires him or not? Because at this point, he's kind of out the door. And what does that do to rate changes, if anything at all, or anything that we should expect as investors?
Yeah, I think, Courtney, what you're adding to is basically about the shadow chair, right? Ultimately, we all know that Powell will be out in about a year from now, actually less than a year. And whether he actually gets removed in between or not, it's really about this committee and then about this next candidate and how that candidate is going to interact outside of the committee. And I think that's what the market will pay indeed attention to. But nonetheless, it's still a committee. So as you had this example of Waller really making a strong case for a cut, doesn't mean that the cut actually will happen. It's still the FOMC that makes that decision ultimately. I do think, though, that could you get some sort of a groupthink here where people are all going to be on the table saying, well, a cut is definitely possible? I think that's the biggest signal out of this meeting is that from here, what cuts will happen, how soon. And there was a little change here with Daly the other day of indicating that she's also on board for this next round of cuts. So Powell out of the way, yes or no, it's the committee that drives it, but I do think they may signal more cuts from here.
Hey, Ben, what's going on? It's Bonawyn. Great to see you as always. Just quickly, I know you give a lot of great insights about the Fed, and typically we focus a lot of our attention around like large publicly traded companies, but there's a large cohort in terms of the small business community that perhaps isn't feeling the same euphoria as might be reflected in the stock market. Can you speak to how rate cuts might affect the front end of the curve and those companies that are probably borrowing with short-term variable rate debt, and how perhaps that might be presenting a tug of war between what we're seeing from full employment versus what we're seeing from the small business community?
Yeah, and I think that's a good point, Bonawyn, because you have companies that you mentioned that are very reliant on short-term funding. And so rate cuts there would potentially help, so to speak. In other words, if you do get cuts, the yield curve should normalize further. The short-term rate should get lower, and those companies should be able to borrow at a lower rate. Yet, it may not happen really because of the strength of the economy. And that difference there of when it will happen and the rate difference for these companies, I think matters. I also think for these companies, their business outlook has been clouded by the tariffs. And if you look at the Atlanta Fed, they put out a business inflation outlook. That's actually still quite high relative to where, let's say, market-based expectations are for inflation. So these companies are sitting in a bit of a pickle here. So rate cuts actually would help them a lot. People have always connected small caps and rate cuts as a positive thing that could see a big rally. I think that would actually be the case. But if we're getting quick cuts, that's where the tension is currently, right? We don't know this yet. So I think these companies have to bite it a bit.